Yo,
Yo, one sec. I gotta get my speaker to work. Okay. Steve, can you hear me?
all good, man.
Aha, we're in. We're live.
You
Okay.
are you're way too dressed up to work from home today.
I am doing a wardrobe change. I've recently decided to go to suit back up. Like Barney Stinson said, suit up, young man. So I'm doing a wardrobe shift. I'm going to be a little bit more formal than before, but I think it's a good change of speed. I look like a professor today. All I need is
Look at
little
you. I was
elbow
just gonna
patches.
call. I was just gonna say, what time is economics class?
Well, judging by what's going on in the market today, we do need someone to guide us through that. I'm not that person, but heck if I know. I'm going to try as much as I can to bring
I am
some
going.
enlightenment to this
I am
situation.
going. Little old school, little Jack surfboards, Huntington Beach.
I,
Shout out my friends
I
in
love it.
Huntington. My son lives there, and I'm heading to California Wednesday. So, figured I'd rock a little
Incredible.
Cali today.
It's great. I mean, the AI news today is huge.
It's fucking huge. So let's get started. I'm already recording, so we're good. Welcome to everybody to the latest episode of the Vibes and Ventures podcast. I am Steve Walsh, also known as the Hands-On Angel. This is my boy, Rob Hughes, also known as the Startup Alchemist, who is dapper today. Did you blow dry today? Was there
I
a
did blow dry. I think it was I would say a partially successful experiment. The reason we're getting a new view today, folks, my Mac Mini is having some moments. Like I'm literally staring at it, just going through this recycle thing. I'm gonna bring it into Apple tomorrow. Hopefully it works out. If not, maybe we'll have to do a little replacement, but it'll be fine. Really excited to get into today's subject. There's a lot going on. It was very hard for our listeners for Steve and I to figure out what we wanted to talk about today because there was so much going on that picking a subject for our three things today it was tough.
I like your lead off. Let's jump right into the AI discussion we were having this morning. What do you got?
Yeah, so the news right now, everything's around DeepSeek right now, and this is I was going to lead into point number two, but we'll stop at point number one, which is, the DeepSeek has figured out a way to make a better product for a lot cheaper with a lot less compute power than any of its rivals, and it's causing ripple effects throughout the stock market, throughout the industry. Nvidia's down. This is not stock advice, by the way, it's just an observation of what's going on. And I think where OpenAI is going to take a hit, I think across the board, there's a sort of a relook at how we're evaluating the outputs of these teams and also the inputs of these teams. I mean, you're talking about the funding for DeepSeek was $5.5 million
Mhm.
compared to the money that went into to OpenAI, which is it's a hundredth of the cost, and they're getting 50 times the results. So it's 50 times better by some estimations than what.
And Rob,
Oh,
keep me honest.
yeah.
Was it backed by a Chinese hedge fund? I think.
I believe so. Yeah, yeah.
Yeah.
But
Interesting.
so the backstory is there's a chip shortage, or there's some of the things that we've done from a regulatory perspective have made it really hard for Chinese companies to get their hands on the chips they need for the compute power to power these large language models. And so they engineered their way around it. And it's like the necessity is the mother of invention, and necessity has caused this. It was supposed to give us a major advantage in the space, and what it did was cause them to have to innovate and to find other ways to get the thing done, and they did that. And so now it's I think everybody that's
Does this
been
become a
working.
race to the bottom, Rob?
No, I don't think so. I think it becomes,
Okay.
I think my estimation is, Steve, that the trend that we're seeing, which is, oh man, I'm gonna go take point number two. I'm gonna go right into point
You're
number
going
one.
right in. You're going to go
I'm
one,
going
two,
right
three, and
in.
just rip it
No, I'm
off.
I'm gonna do one, two, and then I'm gonna take a moment to go, and it's gonna tie into point number three. But I'll leave it. I'll let you go, and then we'll go back. But point number two is this is again this is a byproduct of the way we're spending capital and the way we're thinking about funding companies has to
Okay.
change. You have on one hand, how much money has OpenAI raised?
Isn't it a billion?
I think it's like 500 million or something
Hold
crazy
on.
like that.
You keep talking. I'm going to find out.
Yeah. Okay. So that they had all the resources, all the money. You can't just throw money at problems. You can, and to a certain extent, but there becomes a point where you're not getting the benefit anymore. And so if this company innovated their way around at 100th of the funding of the biggest player in the space, that is such a tell that we are overfunding so many of these companies that don't
Bro,
need
you're
it.
going to want to throw up. As of October, so this is about 3
Okay.
months old, OpenAI has raised $17.9 billion over 10 rounds of funding from 50 investors, and the latest round was $6.6 billion, bringing its valuation to $157 billion.
Okay.
They've raised, that's insane. They've raised
Yeah.
almost 18 billion.
And a team that raised 5.5 million has created a product that's 50 times better. And so
At a
what we
lower cost,
at a low,
for the
oh my God. So you're talking about we're still doing this thing where we're overfunding things that don't need that much funding. Some of the hardware plays, they're going to need funding. Some of the sciences, you're going to need funding. Some of the biotech, you're going to need funding.
sure.
Robotics, okay. Well, there's an actual cost of physical goods that have to go into this, and the R&D is expensive, and we get all that. But this is software, and the thing you're paying for is compute and for talent. And so you have to figure out, how do we get this done better? Because right now we're overpaying by a large portion, and you're not going to get the returns you need as an industry if you keep over bloating valuations and keep piling on cash
And
to
Rob, here's the
justify
funny thing. I
those.
got this request twice in the last month from people that work at OpenAI that want to sell secondaries
Mhm.
at like ridiculous markups. And a couple friends of mine pinged me. They're like, "You're going to do this?" I'm like, "Why would I do that? It's so overfunded. It's not even close. Funny. Like, why would I want to touch that?"
Okay, so this leads into the second one. It was just spurned by I sent you a demo of this, and I wish we had the competency for me to show it right now. But again, technical issues. And it was someone showing how you could build like a very quickly for $30, build like a light product, an MVP for your company, a website of like build out features and all this stuff in less than an hour using DeepSeek. And it's this tail into point number two, which is it's never been more affordable for you to test your ideas at a low technical cost. Like this might be, and I'm not wishing this by any means, but this might be the first shot across the bow for like all these dev shops that build MVPs. They might be DOA today, or very quickly. Like this should be
MVP could be DOA. That's it. That's the hook of
that's
the
your
day.
tweet. I mean, this is incredible. We'll put a link to the tweet in the description for the show, but you'll be able to see how easy it is and quick and accessible it is for you to just go on, try something out, see what's already been built, and basically have at least a front end that looks okay, and you could start testing out. But does this problem that I'm trying to solve have enough customers? And do they want the thing bad enough that I can actually start building real technology behind this? I think I don't think it's
Well,
suitable for like
what
building a full
founders used to
stack.
say all the time to me was, I need to go raise money so I can build my product to find it if anyone wants to buy it. This completely turns that on its head. Now
Absolutely.
it's in 10 minutes, you could build something to show enough to do a clickable prototype to show people.
Yes.
And then if you can get 100 of them to say, yeah, I'd buy that if it exists, then you go build a product.
And look, next Sunday, not to toot my own horn, this coming Sunday, I'm going to the Sunday Club, which is 50 hackers every weekend get together from 9 a.m. to 2 a.m. the following day, 2, 3 in the morning, and they build product together. And so just 3 weeks ago, they were able to go from ideation to something that could ship within one session, within one of these 14-hour, 15-hour deals where they're coding together. So and that's because of stacking of the libraries they're able to build and things they're able to put together. And you get that muscle is really, really worked out. And so that's happening in a bubble, obviously, but there's going to be more of these that pop up, which will be really quick ability to hack away, like test something out, build something like that intermediate product really, really quickly and efficiently, and then go to market with it
And Rob, what's
a
going to
lot
happen is,
faster.
instead of having to do it it's at CIC, right, in Cambridge? Yeah, so
They
instead of
move it
having
around. They move it around, but it's
So instead of getting 20 developers together on a Sunday,
Mhm.
What if you spun up a Slack channel? Or what about this? What about Twitter Threads with a live
Mhm.
stream with
Yeah.
10 devs all over the world using DeepSeek that build a product in an hour?
Yeah. I mean, this is going to get, we're possibly looking at we're possibly on the cusp of witnessing firsthand a revolution in product and
And
how
how
it
about
gets
this? It
delivered.
goes live, NVIDIA tanks, and then Vibes and Ventures is all over. We're already all live.
We're
We
we're
already have the next 6 months. We're already locked in.
we're we're ahead of the curve. But I
That's
know
how it
you have.
goes usually. It goes markets open, NASDAQ reacts, and then it goes to our pod. That's it.
I saw something really interesting. It was this idea that all the best things are like novel and trivial in the beginning, like all new technology are novel and trivial in the beginning, and then when you're looking, at the curve of like where growth will happen or how things will continue on,
And,
you're
and you
always
know what it is,
looking
Rob? It's the
backwards.
time too. Like
Yeah,
these things are happening so fast.
yeah,
30 days ago, Nvidia was the darling of the stock market.
hmm
It was the next 5 years of growth. And now people are
hmm
like, it's over, down 15, 20% this
hmm
morning alone.
hmm
Versus 15 years ago, 2008 timeframe, Amazon was a book publisher and they
yeah,
didn't make any money for 10 years. And it took a
yeah,
really long time. And everybody's like, Netflix took 10 years of selling rentals via red boxes, shipping to people in envelopes. And now they're one of the most profitable companies in the world. The speed at which innovation is just happening, it's mind blowing.
yeah. I think the interesting thing is that at least on the software side, right now, the ceiling is much higher, and the ability to build things faster and have more flexibility in what you build, and so it's not as rigid of a process now.
Sure.
You can. There's a lot of like the ability to build it is changed.
Yeah.
And what I mean is that time frame, the cost, the talent you need, the number of people you need working on things, that whole thing is going through a revolution right now. And it's going to have massive
Totally agree.
impacts on the entire venture scene. If you're thinking about, oh, how big of a round do you actually need to build now? To how much do you have to raise to get
Rob,
a
how about this?
lift?
How about nothing? Oh,
Right,
you don't need to raise anything to get to market now.
right,
What if you
right.
skip the friends and family pre-seed round entirely because you built it
Yes,
in DeepSeek and
yes.
you built it in an hour? Like you're like, the hell am I going to raise money for? Why don't I
And
wait
you
till
have
I get to my first $1 million in revenue?
and you have a million people on your wait list who are dying to give you their money for the thing you think that you're trying to get product market fit for before you build it. Yeah, I mean this is a brave new world, Steve, and we have to there's going to be new rules to moving around in it. There's going to be new
All right, so those were your
rules.
first two.
Yeah,
So do you want me to do my first two
yeah.
or
Do
just
your
one?
first two. Yeah, yeah. I've been
All right, so
talking too
this one
much.
ties into it because something you said really intrigued me. Let me start share. Let me do my share. Boop,
Oh
boop.
yeah, you're still going with the share. I love
Here
it.
we go.
Yeah,
You said something which was the regulatory industry was preventing Chinese companies from getting access to our chips, so they did a workaround to figure it out.
yeah,
This leads right into it because what a shock. The regulatory industry, specifically the SEC, for years has been hamstringing industries that you're in, like banking, on
uh,
holding things like Bitcoin on the balance sheet. Well,
oh yeah,
last week, the SEC comes out and rescinds SAB 121, permitting banks to custody Bitcoin for the first time. And for those that don't understand, uh, SAB stands for help. Oh, right here. SAB stands for Staff Accounting Bulletin, which was basically creating onerous rules around what banks could and could not do to custody Bitcoin. Rob, it's just another one of those things where why would we want to stifle innovation? China is the largest economy in the world. Why would we not want them taking advantage and buying our products? Why would we want not banks, which is the financial instrument in the United States, to take on the fastest growing asset in the last 10 years? It doesn't make any fucking sense.
no, it really doesn't. And I think there's been a lot of hemming and hawing the last couple of months as everyone's been on their edge of their seats to see what the new administration is going to do. And I think what we're seeing right away is deregulation and sort of like
Absolutely.
you see it on the
And
energy.
whether it's crypto or not, it could be banking, could be crypto, could be
Yeah,
chip sales. It doesn't matter.
yeah,
Over-regulation leads to what we just saw, which is someone going,
yes,
oh, you don't want it there? Great. All that happened was the government said banks can't hold Bitcoin. Great. So Brian Armstrong at Coinbase goes, great. I'll just create a fintech company called Coinbase, and we'll custody all the Bitcoin. And he's owned the world on it right now.
Yep.
Same thing with Robinhood and all these other platforms that have said, you don't want banks to hold it? Great. We'll give you 10 other ways to hold it. Cold storage now has developed because of it.
Yeah.
What I'm saying is founders, this is a good tweet. Founders find a way. Period. Mic
Yes.
drop. They find a way.
Yes. I think, and if you're not finding a way, like, get out of the way.
There it is.
It's time to do stuff or get out of the way, because the innovation will not be stopped, and it won't be. And if you're over regulating it and trying to put the genie back in the bottle, or trying to figure out how to put controls in place, I just don't see it. Like, everything's open source, everything's out there. You have to just lean in and do your best to make sure that we don't go over the precipice with too much velocity. But
Yeah, totally
I'm
agree.
bullish. I think this is a good thing on the whole, that we're looking at less regulation. We're looking at getting government out of every single aspect of our businesses and our lives in meaningful ways that allow for innovators to build great things that can change how we live and work. Like, that's what we're supposed to be doing. So I'm excited. I think this is great news on the front of Bitcoin, not bank's perspective. It's my personal perspective. I think it's great. I think it's probably going to follow with some other guidelines around what we can and can't do from a risk standpoint. As banks, there's a lot of rules around what you can and can't do with Bitcoin. How you can be involved, what types of accounts you can work with, and it really made it hard for so many of these
So
companies that were
Rob, keep me
touching
honest.
it.
Most of the
Yeah.
banks just threw up their hands and said, we're just not going to touch it.
Well, not only that, the rules were so onerous that you'd have to build out the entire risk teams to support the line of business, and it just didn't make any sense.
Sure.
Was my perspective on it. It didn't seem like there was enough of an appetite to, like, we don't know whether this is going to be shut down completely or encouraged or what have you, and to build out the risk folks to support that line of business and make sure there's not,
I thought it was
money
telling
laundering and
when,
things.
is it Brian Moynihan's the head of Bank of America, right? When Brian
Mhm.
Moynihan came out last week and said, I think we can't ignore this any longer. I think we have to have a strategy for this. And that's
100%.
massive.
Yeah, that's huge. I mean, it's another signal. I'm just watching signals and being like, okay, where are we going? And the where we're going is almost a complete 180 of where we were going 3 years ago.
It's nuts. But fine by me, man. I just keep stacking sats. It's all I do.
The only thing I would say, yeah, I like the 180, except I have I have more than one copy, but the one I'm thinking about is, when does this start hitting venture capitalists to understand how much, like, how their role in the ecosystem and their role inside of these companies has changed, and it's going to continue to evolve, and, like, there may not be the need for these billion-dollar these funds anymore to go out and deploy capital. I don't think you need $1 billion to build a big company, a great company. I think you would probably get it done for far, far less, and have a much more efficient, hungry, driven, all the tools you're going to need to build a great company for far, far less. And isn't that a good thing? Shouldn't we be
Well, I
celebrating
don't
the
think it's a
fact that
bad thing at all.
yeah, because and I think it's going to change the way we think about rounds and fundraising, the spend and our runways and everything. I think it's going to be revolutionary.
So this is my second one. Comes
Yeah.
out of a conversation you and I had last week, which was, there's a lot of new school stuff, but there's also a lot of old school stuff. For example, most people in my circles and yours still call it tweets. They don't call it
Yes.
post. And one of the things we
Yes.
talked about, even with the shift to X, is that
Yes.
everybody knows what a tweet is, and it really differentiates what you can do on X versus what you can do on other platforms. So I put out a poll. I did a poll on X last week, and I'm going to share the results here. I got about 100. I did it for like a day. Here it is. I got 180 people to respond. And interestingly enough, Rob, 62.5% said we should continue to call them tweets, 25% post, 0% for expressions or something new,
Ugh.
and 12.5% who cares. I was fascinated by this.
Whoever did the expressions one, like, no offense, but please don't at me. That's just stop. I mean, I know we want. I mean, just stop. Like it's not that. That's not it. I think
Yeah,
the tweets, I was talking to somebody else about this because you're sort of like our conversations bleed into other conversations.
sure.
Um, and one of the things I was thinking about was that it's a kind of nice artifact of Twitter.
Yeah,
It's the only one where it was the only one where they weren't posts, they were tweets. It was this. I thought it would have been a great artifact to keep around of, hey, I tweeted this, and like what is a tweet? And it sort of reinforces the story of Twitter, the big overfunded, over burning through capital, not making any money organization that it was bought by Elon Musk and then suddenly running at 20% of the staff beforehand and is more profitable and functioning pretty well. But you can hold on to tweets. It's sort of like the story arc. And every time I think of tweets, I think of the pre-Elon and now the era of Elon around X, previously known as Twitter. And that is always encapsulated with the image of him carrying a sink into Twitter's headquarters the day that the purchase
it's
became
awesome,
official. And it's
awesome.
so funny. He's like, because I knew I just bought the company and I knew they would have to let that sink in. And it's just
That
so funny. It's like, oh, I don't agree with everything he says, everything he does, but oh my God, that is hilarious.
was a good one.
Because they would have to let this sink in.
What
Oh my gosh.
so what's your third now?
Oh, the third one was about more founder equity, and Peter Walker mentioned. We're gonna get him on the show. He did this great graph that was showing the dilution of founders through the rounds, and he was comparing two-person, three-person, and four-person founding teams and the dilution. And so after going through the multiple series of rounds, the founder would expect to have around 11.5 on the two-person team percent of the company, still ownership of the company, and on a four-person team, it was down near 7.5, 8%. And the thing I was more concerned about than those numbers was not a solution or us having a finding as much as a question.
Hmm.
And it's related to my first 2 points, which were we probably don't need as much money. I think the overarching point is less money will do in this new era, especially around SaaS. You'll be able to get a lot more done with a lot less. What does
Rob, is
that
this?
do
Let me
to,
just let
go
me
ahead.
show you something.
Yeah, yeah.
Is this it here?
That's it. Yeah, yeah, yeah. You can zoom in. But there's a great graph, and it's just showing the dilution of founders by round and by size of the team. And I think my numbers are pretty close, but I can't see because I'm shooting from my iPhone. But
So
the
we've
point
got
is, yeah,
yeah, it's so CEO. Okay, I'm trying to figure percentage of ownership by the fund. Okay,
yep,
depending upon series.
yep.
Interesting.
And so you can kind of
Yeah,
see there's a little bit of an advantage for having a two-person team, but it might be offset by a gap that you're missing from having other founders. That's not the thing I'm more concentrating on. It triggered this thought, which was what are dilutions of rounds going to look like in this brave new world that we're
oh
talking
yeah.
about?
I think founders are going to raise less. I think they're going to wait to raise longer, and thus they're going to end up with more of their company. Like this suggests that at Series A, founders own between 15 and 20% of their company. I could see
Mhm.
Series A's going forward, Rob, where founders still own half their company, if not more.
And so that changes so much about the life cycle of these companies and these founders, and also the longevity of founders, where they're going to maintain board control for much longer.
Yeah.
Now you're looking at situations where they might not be replaced because they're, not right sized for the organization, quote unquote, by their board, given a little bit more leash and control and can grow into those roles. I'm
Yeah.
optimistic that the larger outcome, which is, I think, maybe a little too optimistic, but I think where I've talked a lot about this there needs to be a closer relationship between public and private market valuations, and that one of the reasons we have this stockpile or this backlog or log jam of companies that are not IPOing is because their private market valuation is so out of whack with the public market valuation. When they go to IPO, they're no longer being, their valuation isn't set by the people that are investing in them. It's set by analysts who come in and say, this is the health of your business. This is what we think the strike price should be, and this is what we're going to do. they have no incentive right now to IPO unless they need to, or unless their VC needs to get liquidity to their LPs. And so you're seeing this logjam, and
And
it's
there's so many
because
friggin' secondaries available that the
right.
employees go, I'm able to sell secondary, so who cares if we IPO?
Exactly. And so now you start thinking about zoom back out and say, okay, but if we're raising less money and the value, and that's not allowing for the valuations to have the necessity for these massive, massive valuations at each one of these rounds. So it's up and to the right, and look at the how much more it's valued at, and look how much money they were able to raise. We can actually probably get closer. This is probably going to give us the opportunity to have alignment between like how we evaluate companies from a
Yeah,
public standpoint and how we're valuing privately, because now you can kind of get rid of a lot of the noise that's caused by too much dollars flowing through these organizations and too many people needing to have a crazy number to get a good return on it.
yeah, totally agree, man. That's a good one. I
Yeah,
like that one a
yeah,
lot. So
yeah.
my third is I did a tweet on this the other day. Getting back to the tweet, it's founders that are worried about launching things versus solving problems.
Oh
I think
yeah,
all
okay.
too often, founders are really focused on a couple things. They're focused on their next product launch, their next feature launch, their services launch. What they really should be focused on is solving problems, because
Yeah.
solving problems creates opportunity. Instead of launching a new feature, the first question I always ask to my founders when they say we're launching a new feature, product, or service is I say, how many customers did you talk about with that? Well, what do you mean? I said,
Yeah.
how many customers did you go to with either a clickable prototype, a deck, or just a conversation to say,
Hmm.
you know, Rob, you're one of my best customers. We're thinking of launching this new product or service. Is this something that you would be interested in? If so, does it solve any problems you have in the business, or does it help you grow, save money? If the answer is no, then don't do it. Solve
Yeah.
problems and you'll create opportunities. And solving those problems will create your next product, your next service, because your customers will tell you what their problems are. And if you can solve for it, they will pay you any amount of money to fix it. So I'd love your thoughts.
100% agree, and I think it goes back to another overarching talking point that I've had. I'm basically just a bunch of talking points. I repeat myself all the time
Hashtag talking
until
point.
until people like understand. Like I have a perspective, and I've pressure
Professor
tested a lot
Rob
of
today.
this.
A lot of talking
Please,
points. Professor Rob, get
quiet,
out your notebook.
quiet in the back, please. Okay, so my point is that service is where like the biggest opportunity is in the next, like coming out of COVID. The service level across the board has gone down, and there's
Right.
sort of like this resistance to serving your customers, resistance to like going above and beyond that is prevalent as I in all of our lives today, and it was not this way not that long ago. And so the opportunity is if you can really get your teams ingrained into this idea of service, and and you can adopt the mold or the model or the operating sort of a sense of what you're trying to accomplish is centered around serving your customers and making sure that they're really excited and happy with what you're doing for them, and you're doing it in a way that feels great. You're gonna have a hard to mess with business. And I think um when we're trying to think of things for our customers, it's a lot harder than just asking them, hey, I've been talking to folks, then this is something I'm hearing a lot. What do you think? And will this be helpful for you? And how helpful is it? You're going to have to stop being afraid of your customers. You're going to have more conversations with them, and you're going to have to build things that really matter to withstand the next wave of companies coming that are able to build things faster, quicker, are more agile than ever. And if you're not talking to your customers, this is the tweet. Somebody else is.
I love it. So
Yeah.
here's a question. So when I think about, I agree with you wholeheartedly that service is a lost art, especially when serving your customers. And the
Mhm.
ones that do it well, and more importantly, do it in a unique way, are going to win the day going forward. Here's a great example. I'm listening to Gary Vee's new book, Day Trading Attention. I love Gary Vee. I love a lot of what he does. He has a story in there about his dog dying.
Mhm.
And this is an example of someone paying attention and doing something that just is a whole unlock. He had bought a bag of dog food from this company, and he reached out to them and let them know his dog had been dying. Is there any way that he could return it, because he didn't need the dog food anymore? And it was pretty expensive dog food. And they emailed him back immediately, and the customer service rep got a hold of him and said, we want you to keep the dog food. We want you to donate it to a shelter for a dog that needs it. We're going to refund your dog food 100% of the money that you spent with us. And then 2 days later, flowers showed up at his office and a
Yeah,
condolence
I mean,
card for the dog. And he's like, do you think I'm ever not doing anything but buying
zero
more shit from
chance.
them? Zero chance.
Zero
And
chance.
the thing he said was, sometimes doing things that don't scale is the unlock for your business on the customer side.
Yes.
And that really speaks to what you were just talking about.
100%, and I have a bias towards this, so I'm trying to I'm trying to have that in mind when I'm speaking. But 100%, like that's a customer for life. And what would you pay for a customer for life? That's another tweet, right?
Seriously, what would you pay?
It's just like there's no price that tag that, like, especially if you know the value of your customers, like, and if you have a lifelong customer and you could lock it in with them, there's a price tag on it, but it's a lot higher than people think, especially if you're able to assure that, hey, we're gonna have this as a loyalist forever, and especially
And
their
when he gets
client.
a coupon on his Instagram feed, because that's what happens from Chewy, because he talked about this on a book publishing, he's going to ignore that coupon because he's like, it's not about the $3 off. It's about
Mhm.
how you make me feel, and it's about
Oh my
the experience
gosh.
you give me. It just is,
That
Rob.
It's that old quote, people forget what you said, they forget what you did, they never forget how you made them feel. Then we're entering an era, I'm pretty sure that how your
Rob,
customers
I
think
know
about
we were
you.
talking about,
Yeah.
we started the episodes talking about suits and clothing. I've
Yeah.
got a guy, you've seen some of my jackets and stuff. They're kind of cool and funky. I've been doing business with this guy for 12 years. His name's Chris, and he works at Samsarin in Bangkok, Thailand.
Yeah.
Comes every 6 months. I hang out with him. He's become a member of my family. And every time he comes and we do suits or jackets or whatever, all we talk about is my kids. He wants to talk about, what are my kids doing? Because he's known my kids since they were like 4 years old. What are
Oh
the
my
kids
God.
doing? How are they doing in school? What's happening with them getting his license? And he knows everything about them. And I can buy suits other places. I can get them cheaper at other places. There is zero chance I'm going to do that. Zero. Because this
Chance.
guy has gone out of his way. He sends me, every time we meet, he'll send me a follow-up card. He'll send me, last time he sent me a couple of scented candles for my wife after like, it's just the little things that don't scale that just get
Yeah.
me. And
Yeah.
it's that's how you win lifelong customers. It just is.
You know what's interesting? I love that you're saying that. I met this guy last week. Our mutual friend Steve Bernard introduced me to another Steve, and other Steve and I had a great time. And he's like, well, he's trying to get into venture capital, and I was like, here's some thoughts. Here's what I would do, and just kind of mind sharing with him, like, here's some things you could probably do.
Is that
And
Steve
then,
Doman?
yeah.
I did a call with him last week too. He's awesome.
Really great. So I mentioned to him, I was like, hey, I'm doing this event tonight, and he lives in Back Bay. I'm like, you're in Back Bay. I'm doing the event in Back Bay. You can pop by if you want. And he's like, I'll be there. And he got there early. He's like, how can I help you? What do you need? And I was like, man, this guy's on one. And super helpful. We needed a couple things, and he was just great. And then
By the way, you're immediately going to love him for two reasons.
let me finish the story.
Oh, I'm sorry. I thought the
And
story
then
was
he
done.
didn't give me the two. Professor's still teaching. Sir.
Jesus.
Demerit. Is that what we do? So no, the point is, and then he sent like these awesome coffees to my office with a handwritten note and saying thank you for the time and the advice, and looking forward to building our.
Coffees.
Dude, I said, man, this guy's on. Like he's doing all the right things. So who got an invite to tequila night? Steve did. Of course he did. I got Steve's going to be there, so you get to meet him in person. He's incredible in person, but like. Of course he did, because like, he does all the things right, and it's like I know how he's going to treat anybody I send his way.
Yeah.
All right, I've cut you off. What were your thing? You had
No,
a thing.
I've just raised it. So when
Oh.
I did my call, I found out two things. One, he likes tequila, and I told him about the agave connoisseurs, which
Yes.
he's in, obviously. And the second was, we have a conversation. I was talking to him about the blended blue tequila brand that I'm doing, that
Yeah.
with Charles. So we talked tequila for like 10 minutes. Then we talk venture the rest of the time. Like you, how can I help him? How can my network be helpful? Here's some stuff we do. I said, Rob and I got to do a bunch of events. I knew he was meeting you. We'd love to include you. And then at the end, he goes, any chance you could, and he knows Steve Bernard and his friend from his fund were involved in the tequila. He goes, any chance you could shoot that to me just to take a look at? I go, yeah, no problem. Don't think anything of it. Forward an email, take a look, no big deal. my friend Matt, who runs the deal with me, calls me like 2 hours later. He goes, "You know a guy named Steve D?" And I go, "Yeah, why?" He goes, he just jumped into our tequila deal. I'm like, "Oh." He goes, "How well do you know him?" I'm like, "I did a 30-minute call with him, first time I ever met him." He's like, "Fucking A, man, let's go." Guy's awesome.
He's really good. I think you're gonna like him a lot in person. Like he was just great. We met up for coffee and went way over, but it was not like one of those way overs where you're just fretting. It was one of those way overs you're like
You weren't looking at
I'm
your watch every 5 minutes.
I wasn't, and it shot right by, and I just eventually was like, I think like I ran out of coffee, and I was like, I know I don't drink coffee that fast, and if I'm done with the coffee, we must be overtime. So I looked down, and sure enough, we were.
How about
But
that? That's a tweet. That's a tweet.
uh,
How long it takes you to drink a cup of coffee when someone tells you how much you care.
oh, okay, that's close.
We got to workshop. Listen, it's
We
fucking
got to deep
live, dude.
seek
Give me
it.
a break. You put the
I
stupid
know,
coat on
I
today, and all
know.
of a sudden you're like, "You're
I
doing it
feel.
wrong. Raise your hand. Shut up."
I don't think it's that. I think it
Jesus
might be a
Christ.
little of
Hey,
that.
Professor Plum,
Hey,
take it easy.
it may be that. Like, I'm like more of authority now.
Okay.
Like,
Next week we're back to
look,
sweatshirts for you because I'm not liking the
no,
look.
you are liking the look.
I'm
You're gonna
liking the
like
look.
the
I'm
way I
not liking
look.
how all of a sudden you flipped the switch and became my fucking college economics professor.
No, I'm just saying, like, your tweets are so good that I don't know if that meets the muster. If you tweak it, it'd
That's
be
a
better.
better way to say it. That's a better
That's
way.
what
Get
I
a
was.
workshop
That
on
was
it.
what I was trying to get. It's just a workshop away. It's a deep seek away.
It's a deep seek away. All right, we're going to end on that. We're a little over, but thank you to everybody for joining. Thanks to my good friend Rob, Startup Alchemist. I appreciate you, my friend. We will
Of
see
course.
everybody next time on the Vibes and Ventures podcast. Thanks for joining.
Thanks, everybody.
And we are stopping and we're out.